Hey, what's up guys, welcome back to a brand new video. So today I'm going to be showing you guys why JeaFX's trading strategy is actually the best strategy out there, because I've tried a fair amount of strategies, order flow, all of that. Basically, I'll just show you guys like practically what this example is, how it works, and basically what I've experienced myself, right? The idea is in every time frame, right? There's always a demand level that price needs to retrace and go higher from. This happens all the time. Now it usually looks something like this, where you have a candle which is not retested. It's basically an unclaimed block, right? You have a low, which means there's like an order block over here. You could say like, you could even like, some people could even like entry from this wick right here. Some people do that. But basically this block right here is where you entry. So let's say like there's a huge imbalance in price. Let's say price just goes or displaces without pulling back. So this whole area becomes a point of interest, especially for some spot to sort of rebalance and go higher. Now, even though there's a bunch of fair value gaps above, this little fair value gap is actually the one that you guys should be looking for. I'll show you guys what I mean by this, don't worry. But this low is actually at most, it would retrace here and go. But the thing is, this in itself doesn't work. You need to always wait for a market structure shift. Let's say this was only 15 minute. You want to wait for a 1 minute market structure shift. Now, the way you're going to do this is, so 1 minute, I'm pretty sure you guys know what a market structure shift. If you guys don't know what a market structure shift, it's basically this is interterm high is broken. You see a pullback, and then you see a retracement right after this. So as you guys can see, there's a lot of restrained liquidity grabbed in this area as well, if you guys look at it like that. So at some point price will in fact come down. Now the thing is, the interesting point about this is like you do the same thing, but when it comes to like TPs, you want to do the same thing but in inverse. So the like the lower part or the top part, if you flip this around, okay, so if you flip this around, let me show you guys exactly what I mean, so that way it makes more sense. Trust me, like I've done so many. I'll show you guys practically examples as well. So let me try to like, can I like flip this around? I don't know if I can flip this around, but basically if I flip this around, guys, I don't think I can flip it around, but let me try to like, hold up, give me a second, guys. I might be able to like flip this around. Okay, there we go. So now if I flip this around, sorry, there we go. So okay, over here it looks oh my god, I can't speak, but it looks a little weird. But as you guys can see, this right here, now you see like when I flip this whole thing around, like the as much as I'm entering over here, like this is my entry point, like this is my exit point, like right at the body, the lower part of the body of the unclaimed order block. Now the thing is, like if there's a lot of space, like let's say there's a bunch of like there's no spaces for an order block. Now if you guys don't know what how an order block is made, I don't think I should really explain what the formation looks like, because an order block is usually formed when there's like an actual imbalance in between. So this is the real candle that really makes an order block, even if there's a liquidity sweep in this area. So what I wanted to mention here for you guys is basically, as long as this level is retested, right? This level is basically where I TP. Okay, so let me show you guys how this works. So if I go to, I'm just gonna show you guys like some random spot in time. Okay, I'm just gonna like just select maybe like somewhere here. Okay, so what I'm gonna do here is, as you guys can see, right, in any of these time frames, this is applicable regardless of the time frame. So it would be better if you guys can refine it with high time frames, but obviously that's not a must. But if you guys see all these imbalances, right, you can see that at each of these levels, right, this level, right, like let's say for example in this case the order block, where was the order block really? There was no order block in this area, right? But in this case, for example, there is an order block. There's a little bit of an order block. See, there's a fair value gap in between. So this demand level is a potential level of interest. For example, as you guys can see, the market structure, right? This is involving market structures and unclaimed blocks, okay? So as you can see, unclaimed blocks as in unclaimed order blocks, okay? So as you guys can see, this market is basically trending towards the downside. So as you guys can see, this has shifted from a buy program to a sell program, because we shifted market structure officially over here, right? So we have this confirmation. But what I gotta show you guys is, okay, so let's say for example, if I just play price, okay, this is kind of slow because of because it's on the weekly. But if I show you guys, okay, I'm gonna show you guys something. Let's pay attention to this, okay? So over here, let me show you guys. Okay. Okay. Whatever. Okay, I'm gonna show you guys something. Give me a second. Okay. Okay. Okay, this is enough. Okay, so as you guys can see, right, this whole area is a bunch of rest liquidity. Okay, this example is not that great, but what I need to show you guys is like there's no rest in liquidity in this area. But if you guys look, wait, there's no rest in liquidity. This is a bad example. But if I show you guys like over here, for example, there's no like order blocks, right? But if you take this area for example, right? In this case, okay, on the weekly time frame, this time frame's a little choppy. Let me try like a different chart. This fucking GBP USD is a little annoying. Let's go to like some random spot. Okay, so let's say for example right here. Okay, so as you guys can see, there is a order block over here, right? You see this? If I note down this order block, you see this retest. Now, mind you, this is the strong low, and you guys can see that price has shifted structure, right? Shifted structure. Now, if it breaks, mind you, if it, so we were in a sell program right here, right? All this was sell, like basically we went from a buy program to a sell program, right? But then if you guys like over here, we officially shifted market structure over here, right? But let's say for example, like in this case, if it breaks this high that it over here, right? If it breaks this high, then we're pretty much good to go, right? Let me show you guys something. Watch this. Okay, so mind you, this is the strong low over here, right? This is the strong low, and look at what happens. So now this high was broken, so we have a market structure shift, right? We had this high which was not broken before. We have a change of character as well at the end. But as you guys can see, what I'm showing you guys here is the fact that this high broken, right? This high broken is basically a market structure shift because we went from a sell program to a buy program from here, right? This basically this move right here. So the point that I'm trying to make here is the fact that over here, if you guys pay attention to the order blocks, right? This order block is not reclaimed at all, okay? Which means, right? Which means, now obviously we know because price is going bullish, right? Because price is going bullish, once again, if I just drag this out to the side, we're going bullish, right? Obviously. So because we're going bullish, the last thing that you want to do is be bearish in this fucking market cycle, right? But the thing is, because we're going bullish, there's a high likelihood that we're going back to rebalance the same level over here, right? This level. Now if I play price forward, for example, this is a strong high at that point because this level doesn't has like no specific need to be reclaimed. Okay, so if I play price forward, for example, so it's probably gonna just do a few back and forths, impulsive corrective, just like that. Okay, and as you guys can see, almost there. Okay, if we're pulling back a little bit, it's okay. Mind you, this is on the weekly time frame. Okay. Okay, so as you guys can see, now we have this retest, okay? So now, if let's say, for example, we're shorting from here, okay? Let's say, like, from here, like this level right here that we're in, we're going to short from here. Now, unless there's high time frame rest in liquidity above this, which there is no high time frame rest in liquidity right here, it's safe to say that we're going bearish. Now watch this. Do you see that? Let it go, let it go. Just give it some time. So now, mind you, this is the ratio, okay? This is the dealing range that you're going to be dealing with, okay? So this is the destination right here, okay? Where I marked earlier. So over here, this specific spot. So if I play price forward a bit, as you guys can see, price just drops. See, almost there, but we didn't really reach there. I'm expecting a pullback, and boom, just like that. Now look at this, okay? So as you guys can see, there's more. Is there more risk in liquidity below? No, not really, right? So now what does price have to do? Shift stock. It needs to go bullish over here, right? Look, what happens right after? Now, mind you, this is the protected low. Okay, seems like prices. Seems like there must be some unbalanced low. Let me see. Yeah, this level. My bad. Sorry, I didn't really see this. this level, right? This level is not balanced before. So it's basically retracing towards this level. Okay, first towards here and then towards here, right? Because why? Because we are overall bearish. If you guys see this now, the moment that we broke this, right, this over here, boom, we're bearish now. Look, the market's always on the high time frames or low time frames. Low time frames is a lot of noise, but on the high time frames, it's always either going bullish, it's going bearish, or it's consolidating. Something like this. You won't trade this, but you would be trading one of these, right? Because this is basically, this is risky as fuck, okay? So, basically, because we're aligning with the whole bias of the fact that we're going bearish, where is it ultimately headed towards? This unbalanced level right here, as you guys can see. Okay, so let's wait for price to hit there. Watch. This is on the weekly. It's okay. Let me go back to the monthly, so that way it goes faster. Okay. This is like a few months in advance. So I'm just showing you guys like the power of this, right? So let's wait. Wait. Okay, this might take some time. It's probably retracing towards here, this unbalanced high. It's gonna retrace towards here. It needs to balance this. But again, we're still bearish, okay? Because there was a huge imbalance here. It's probably gonna rebalance this. Look, let it go. Let it go. Let it go. Let it go. You see, right here, it tapped this level, right here. Okay, this was in 1999. That's crazy. Look at this. We tapped this level, and we have a what? An instant reaction right there, as you guys can see, right? So why does this happen? Right? It's on the weekly. On the weekly, I told you guys. See? You see this over here? So now the market's changing the structure. Now we're headed towards where? Not this, because there's no order blocks. No, there's no rebalance. But first, it's headed towards this level. Now, once it shifts market structure, watch. Now, your stop loss should be below this low right here, okay? So again, this is just to show you guys the example. Over here, if I just play price forward, let's wait for this to, okay, it's retesting this level. It's okay. Your stop loss should be not at this level right here. Okay, seems like it just stomped through, but that's probably because, why, right? Market structure. So we didn't really shift structure. Now, if it doesn't really shift structure, that means there are unswept lows, right? There are further unswept lows. For example, like at these points of interest, if it doesn't, like for example, these are points of interest to the point. Now, this on the weekly, for example, is the, the point of interest, right? Now, if it doesn't shift structure, that the odds are that there's basically more liquidity below. But do we need to know all this? No, we don't, right? We don't really need all this. The real reason why I'm showing you guys this complicated example is because I want to show you guys that this is the strategy that works. Okay, that was some old charts, but I'm going to show you guys how this works. And this is a trade that I really took. Okay, so over here, this is not, wait, no, this is not a trade that I took. I don't think so. Okay, so as you guys can see, there's a trade that I really took. So over here, what's the point of this, right? Why did I take this trade from here? Now you guys can see that the overall structure of the market, right? We went from bullish, right? We see this bullish structure over here, just like this. Oops. You see this? And then after this low, right? This low is broken. We see this over here. You see this? Now, even though the displacement is utter dog shit, we see a change in character over here, right? We see a whole change in character over here when it broke this low. Now what this is saying is the fact that we're bearish, right? So again, don't bother thinking about like stuff that's above when we're bearish. For example, like some people might think, oh, what if we're gonna come back and rebalance this and then go lower? No, here's the thing, okay? Hear me out. Now, if we're bearish, what you want to do is just look for points of interest to bounce off of rather than balance back. So what I mean by that is, like, let's say, for example, in this scenario, right? Like, in this scenario, okay, this is a bad example, but this is a point of imbalance, right? See, there's a huge imbalance here, and then this is a good order block, right? But here's the thing, okay? Some people, especially myself, right? What I would like think of constantly is the fact that what if price just comes back and goes, right? But no, think of it like this, okay? Simplify it a little bit. Think of it like this. What is the price overall doing, right? It was bullish all this time, and then now we have shifted to bearish, right? So will price really retrace here and then go away? Do you really think so? No. It will rebalance some significant level, right? Whether it's this level right here, this level is a point of interest. Again, I have it all marked out. So this is where we are in the current point in time. But all this level right here, or even further, this level, right? Or even these are basically swept, okay? So I don't think it will retrace this low, but if you guys can see over here, see? So if you guys see all these different levels, right? You can see that these levels, like this level has been retested, right? So this level has not been retested before, but you guys can see that there is an imbalance over here, right? If I show you guys, now if you picture that earlier structure that I showed you guys, there's an imbalance over here. So this is a strong low because it's been backed up by this earlier structure. You guys see? It retraces, taps back, right? You see this imbalance right here? Retraces, taps back. Now it makes this a strong low. Order flow, right? Order flow, order flow, order flow. Okay, so there's a huge imbalance here, but that's besides the point. Now, if you guys notice this over here, right? This is caused, okay, because there is a huge imbalance in this area, right? This fair value gap is what taps back into. But what I'm saying here is, for example, this level, right? This level was never tested before, right? The price just went, right? Price just went. But the thing is, overall, price needs to rebalance this level right here, right? So then, what is price going to do? It's going to keep coming lower. Now, what do we see here on the 4 hour, right? We're bearish. We have shifted from bullish to bearish, right? Do we have any other unswept highs? Yes, we do. See, all these highs. Now, this high, this long-term high, has not been swept, right? This one has not been swept either, right? There's a lot of resistant liquidity in this area, but this was taken out by this. So it's basically it's going to be retracing towards here. But when is the question, right? So when is the question? Now, when is not really one of our problems, because what we're expecting is to just know the overall narrative, the fact that there's a lot of resistant liquidity in this area, and that the fact that there's a lot of resistant liquidity here, you know, over here in this area. And that price just needs to go and take it eventually. But does that mean you should obsess over it right now? No, you shouldn't, okay? Over here, we know that the market structure is bearish, right? We know that the market structure is bearish. So all we really need is one of those systems in this time frame. Now, what I mean by that is, for example, in this live time frame, right? You can like check, today is the 10th of October. So if you think I'm joking, you can check right here, okay? So as you guys can see, I've marked it out, okay? I've marked it out, oops, sorry. So I marked it out. So as you guys can see, this huge imbalance, right? Before this demand level, before this huge imbalance, right? Now we're retesting this level, right? As you guys can see. Now the thing is, if you refine this further, now because the whole concept of time is fractal, if you refine this further, right? My alignment is 4 hour, 15 minute, and 1 minute. If you refine this further, there is another imbalanced low over here, this level, right? So what is price gonna do right here? This is on Euro USD. You guys can check it out if you guys want. So over here, what is price gonna do? It's gonna come here. It's gonna have a market structure shift. Now, until there is a 1 minute market structure shift, right? That if you guys don't know, once again, what a market structure shift is, it's basically this. Now, until this proves, okay, proves that there is a market structure shift. Again, in this market structure shift, I want to see something specific. I don't want to just see wicks from this level. I want to see proper candle bodies closing above this inter-term high. Okay, that's what makes a market structure shift. In this pullback, that's when I would entry, targeting what? The low of an order block. So this level makes a good level, like this level makes a good level for price to retrace away from. So if I entry from here, put my stop loss below this low, as you guys can see right here, okay, If I, as you guys can see, there's a low right here. So there's a strong low over here. And then if I use this, right, because this is the only point where there's a huge imbalance, supported from. So that's the demand level order block. Okay. So now we're just going to inverse this. So we're going to expect a reaction over at this level, at this specific level. Okay. Where I have this line right here. Okay. So once we see a 1 minute market structure shift, we can safely take this trade towards the next draw. Next spot where there's something like that right here. See? Do you see this? Again, see? There's no other spot where that happens. This imbalance, this supply levels order block imbalance really happens from here. So you can TP over here. Simple as that. Okay. If you don't believe me, you can go and backtest this and you can basically take it. Now, once again, this is a huge risk to reward gap, right? So if I delete that, it's a huge risk to reward gap, right? So you wouldn't be you wouldn't be the type of guy to just basically be like, fuck it, let me just take this huge risk to reward. No, what I would do ideally in this scenario is I wouldn't trade when we are at a significant level like this. Okay, what I would wait for is a 15-minute market structure shift. Now what I mean by that is like something like this. Okay, so because overall in this scenario, unless you are willing to put your stop loss all the way here, right, all the way here, you wouldn't really want to entry from here. I repeat that. Okay, now again, so if you guys see this, right, if you guys see this level, right, this level has not been retested. Okay, this level has not been retested, which means price is more likely to retest this level. In other words, if you enter off one market structure shift, a 1 minute market structure shift in this key level, right, in this key level, you will get liquidated. Even if you see a market structure shift, a clear market structure shift on the 1 minute over here. The reason for that is because there's risk in liquidity. Like the strong low is supposed to be at the end of this box. Okay. So once you understand this, so once you have a 15-minute market structure shift like this, right, you can join in on the order flow. Now, what I mean by order flow is where the river is flowing. Okay. For example, right now the river is flowing downwards, bearish. Okay. So the last thing you want to do is be bullish. Okay. So you see over here, we're basically going lower and lower and lower, right? But over here, right? Over here, once you see this, because this is a key level, once again, you need to see some sort of extra confirmation in order to take this. Because if you see a 15-minute market structure shift, that's when you have proof that this has really shifted market structure, and therefore you can use one of these imbalances. Let's say there's a demand level order block over here. Same scenario as what I showed you guys earlier. Let's say there's one of those over here. You put your entry here, maybe follow order flow, because this is a strong low at that point. Okay, imagine we're coming from the tops just like this. Okay, so let's say this is a 15-minute market structure shift. Okay, just like this, broke the high, like over here, market structure shift, inter-term high broken, pull back, and this right here is going to be towards that one of those. Let's say there was one of those candles over here. Boom, just like that. Okay, now you don't want to entry just randomly either. Set an alert. For example, if you don't know how to set an alert, just put this, right click, add an alert, and you can just name it whatever you want. So I have a bunch of alerts on my thing as well, as you guys can see. So what I do here is over here, I need to wait for a 1 minute market structure shift because I need extra confirmation that we're really shifting market structure. Let me show you guys specifically what I mean by that. So something like this. Okay, something like this. I need to see this on the 1 minute. So once I see this on the 1 minute, I can use the 15-minute strong low as my stop loss and whatever the draw on liquidity is. For example, in this case, I could even target something like here. See, this is the first target. Okay, so assume this was a good level. Okay, so assume this was a good level. So even in this scenario, I can actually target up to this candle. Now, I wouldn't recommend going higher and higher and higher in this type of scenario, because the higher you go, the more risky it gets, right? Because for all you know, it might like rebalance one of these lows, like with some imbalance over here. So if you're joining the order flow, I would recommend going towards the nearest draw on liquidity. I repeat that, nearest draw on liquidity, nearest candle, okay, nearest supply level. Okay, so again, Even if it goes higher, that's okay, right? That's okay. But you want to make sure you're here, okay? You TP before the candle, because this is the candle, okay? As you guys can see, I would consider this as the lower area of the candle. So you would TP there. And do not go for anything above a 1 to 5. I would highly recommend sticking less to 1 to 5, right at 1 to 5 maximum RR, okay? So I hope this is clear, and I hope you guys enjoyed. I hope this was informative. One more thing, right? On this 4 hour, on this current dealing price range. So if you guys can see, this is the swing low to this swing high, right? Sorry, not the swing high. So if you see this whole overall price like that we're dealing with, it starts from here, right? Starts from here, goes all the way to up here, right? This is the high. So if I draw my fib all the way from bottom to the top, you guys can see that this is basically we're at discount, right? So we're at discount. So any entry from this area is actually pretty good. Now, within this price leg, right? Within this price leg, assume that once the market structure shift happens, you see an established swing low and swing high. Assume this is the low, right? You want to always try, let me just get rid of this for now, okay? You want to always try just entry from discount, okay? Entry from discount. Try to entry from discount. Anything above, below 0.5, as you guys can see, okay? Because again, I'm not talking about in this range, in not in this dealing range, but rather in the leg that you're dealing with. That's basically from here, this TPD top. That's assuming this is the spot where price stops, okay? So in other words, the swing low, okay? So you want to entry. You have a bunch of entries. You can entry from any of these spots up to here, okay? Up to here, you can entry from any of these following order flow. Again, what is order flow? Where is the river flowing, okay? You do one of these, you pull back to maybe a demand level order block over here, boom, just like that, okay? Towards one of these. Again, target the lower part of the body, okay? This is not one of the candles I would target, so I would probably target like over like here, because I'm not really trusting this doji. So again, you can target like the lower part of the body right here. This is a good example over here. See? Anyways, I hope you guys got some value out of this. This is basically how I trade. This is how I like ran all my trades. I had a few bad trades as well once, but let me show you guys my new account. Basically these are my trades. I took 1 W today. I have one of my positions. Don't worry about this trade. I didn't really think too much before I fucking entered on this, okay? So I'm just like messing around on this account where it's on about 2021. It's a $2,000 funded account. So again, I'm on the phase 1, don't worry. So over here, it's a 1 phase account, by the way, for anyone wondering. So over here, as you guys can see, I need to have like multiple accounts in order to like really be funded. You know what I mean? Like I don't want to like just buy one account and just think, oh, I've finally been funded. So over here, as you guys can see, 15 minute, there's an order block. I don't know why I entered here, to be honest. Like you can see that this has been like clearly validated, but it's been validated, but I put my stop loss here. So see, I put my stop loss right here at this low, and then I saw a market structure shift over here. No, I didn't really see a market structure shift. I'm trolling. Like I didn't see a market structure. Oh yeah, I did. So I saw this market structure shift, and I entered, and I'm targeting this as my stop loss. Again, I'll show you guys a beautiful execution. I don't know if it's just NQ, but like, bro, look at this. This was an execution that I took earlier today. This one. See? Exactly what I'm talking about. I even like put my stop loss here. This, right? 104. So you can see there's a lot of risk and liquidity in this area, and the overall narrative is aligning. See? Overall narrative is aligning. So as you guys can see, that's how I catch all these types of trades. So this was a fucking miss. This was good. Again, this was not a pullback. See, this was a miss trade, and the fucking alarm clock is still there. Okay, I'm just gonna get rid of it. This was a good trade. Once again, this was a good trade. This was a fucking miss. Once again, in this scenario, I'll show you guys something, right? Let's say this is the current dealing range, right? This is a swing high, swing low, because this was an established swing low. Now, if I draw a fib, let me just draw it the other way around. So it goes from 0 to 1. Okay. So if I show you guys now, if you guys see this entry, right? this entry was below, right? Technically it was below discount, but here's the thing, okay? At discount level, you guys can see that this retraced towards this order block, right? So again, this is not to say that this strategy works all the time, right? There could be flaws, but if you guys can see, there is a over here, let me show you guys. So there's an order block over here. There's an imbalance at this level, right? I could consider this an imbalance. No, I wouldn't really consider this an imbalance. So again, this was a scenario where this strategy basically failed, okay? I just want to show you guys purely. This was a fit scenario. These are all the scenarios. So out of like, if I had to give you guys like a ratio, there's one failure and like a bunch of wins. If you guys look at this, see? A bunch of wins. Except for the times when price just doesn't fucking retrace back. Again, you can just short the market once again from one of these. So once you see a market sort of shift, that is, okay? But if there's a lot of risk and liquidity, so you want to pay attention to the overall narrative as well. There's a lot of risk and liquidity above, as you guys can see. So again, I hope this is helpful to anyone. Again, don't fucking depend on like market maker models in itself. You always gotta pay attention to the overall narrative, okay? Markets, anything doesn't really matter as long as, like, if you know what's going on really, then you're fine, okay? So once, as you guys can see, this is what it's retracing towards. So once I see a 1 minute market structure shift, as you can see, step back, right? Tap back over here. So once I see a 1 minute, 15-minute market structure shift, or even like a 15-minute market structure shift, because this is a key level, okay? You can see this is the level that I'm talking about. And once I see a market structure shift over here on the 15-minute, as you guys can see, once it breaks this level right here. So in other words, if I had to make this clear, once it breaks this level, like this, pull back, just like that, okay? Target this as your stop loss, okay? Because this is the strong high, okay? Strong over here, strong high in this area, this one, okay? And then you want to target whatever the drawn liquidity on the other side is. Ideally, I wouldn't trade when we're at like a major key level like this one, but if we're following order flow, we can just catch the moves on something like this. See, these are retracements, as you guys can see. So once again, let me show you guys something. Let's see. So if you guys can see over here, right? This is the last candle before this impulsive move, right? So if you consider, like, let's say on the forward, if I look at the forward, you can see that's why you should go from top down, top to bottom. So if I look at the forward, right, you can see that there is a candle over here that needs to be rebalanced. So there's a likelihood that price will rebalance this and then go higher. Why? Because rest in liquidity, unswept highs, okay, long-term highs, in other words. All right, guys. So that's pretty much what I want to show you guys, because we're overall trending upwards as well. You can see the market structure. See, if I go to the 15-minute, as you guys can see, these are all little moves within the 15 minutes. So what matters is the top-down narrative, okay? Again, for me, if you guys want to know, it's basically weekly, 4 hour. I don't really check weekly that often, to be honest. I just check 4 hour, 15-minute, and 1 minute. 1 minute just for the market structure shift validation. Again, market structure shift needs to be with proper candles, not with wicks. Again, if you guys want to pay attention to my usual this is why every trade that I've lost, it's because I didn't wait for a market structure shift. See, there was no market structure shift here, okay? So I want to show you guys specifically like the trades that I lost. It was because, okay, as you guys can see, it was because I didn't wait for a market structure shift at this level. So market structure shift is the most important thing on the 1 minute, okay? So that's what turned me from a unprofitable trader to a profitable trader, okay? So if you guys look at this Euro USD, over here, if I show you guys this specific setup, if you guys can see over here, let me just get rid of this junk from here. So as you guys can see, we have, see, tap back, go, maybe tap back, go, okay, go, or even go, market structure shift, tap back, and then maybe even go higher, right? Doesn't really matter, because these moves in itself is enough to make money, right? This, whether it's from here to here, or from or a retest to here, right? Again, all these little moves within the overall narrative. Now, even though we're pulling back, even now we're bearish in this scenario, but in the bigger picture, we're still coming back to rebalance a level, and there's long-term highs or a long-term unswept highs in this area that needs to be rebalanced. Now, this one has been rebalanced by this, but this has not been rebalanced before, right? There's even higher levels that need to be rebalanced, as you guys can see. Okay, so anything, just don't overcomplicate it either. Like, don't pay attention to everything on the left side. Like, you don't really need this. As long as you know this exists, that's enough. Okay, you don't want to overcomplicate it either. You don't really need all this. You just need to know this. Like, maybe do this once a week. Just know that this is basically the nearest Himalayas that we're trying to climb. Okay, anyways, I hope you guys enjoyed this. This was pure sauce for a while, and I hope you got some value out of this.